All right. All right. All right. All right. So, good morning, good evening, good afternoon, everyone, depending on where you are. Uh, you're welcome in today's session. Either those who are going to watch the recorded session or either the live session, you're welcome in the session. Yeah. So make sure you mute your microphone, make sure you mute your video because this will be a recorded session so that for those who are going to watch a recorded video, or a recorded session, it's not gonna interrupt them. So in this session, I will be using two languages. I'm gonna be using English mostly and also Kinyarwanda as well, because some of the members are comfortable with English, other members are also comfortable in Kinyarwanda. So we're gonna use both of the languages. So I hope everyone is comfortable with that, both English and Kinyarwanda as well. So yeah, so before we start the session, this will be a session because I'm gonna be having live trading sessions from today till maybe from today, maybe till Friday. That will be free recorded session. I mean free live trading session. So make sure if you have for the first day, I'm gonna consider question and answers. Like maybe if you have questions regarding forex trading, you can mention them in the chat box so I can give the answers, question and answers for today's session. Uh, question and answers. I'm gonna waiting for questions as we're looking for a setup for today's market. So I will be analyzing the market since I'm waiting for the question. Any question you have regarding forex trading, any question you have regarding forex trading, mention it in the chat box. Mention it in the chat box as we go ahead. So and also which currency pair you want me to analyze. Like if you have got a currency pair you want me to analyze, mention it in the chat box also for me to get to analyze it. So let's see what we have today. And as always, before we go ahead with the session, I always make sure we are informed regarding news, like regarding what's going on in the world economy, because we do depend on economy. Like we also do depend on fundamentals for us to know the direction of the market, for us to know what is the bias of the market, like what is there, like what is the fundamental saying, or what is the news active in the market saying, or which time of the hours are we going to be avoiding trading, or do we have bank holidays, for example, because this is like forex factory. This is the application we use or the website we use to analyze or to be informed regarding fundamentals. These are like news. Let me share the link in the chat box. Let me share the link in the chat box. That's the link for the Forex Factory. This is the application we use or the website we use to to be informed regarding news or regarding fundamentals in the market. You will see, for example, we have a session of date, we have a session of hours, like timing of the day, depending on where you are right now. And we have currency, and we also do have impact. And we also do have the name of the news which is gonna be released and the details and whatever there's going on here. So the date, this is today, we're on Tuesday. Like for example, this is Asian time, because currently my location right now, I'm in Asia. Currently right now I'm in Asia, so this is my location. Like for those who are in Rwanda, if you open right now, you will find that like you find the exact time of the timing of your time. If it's here, if it will be 12:30, to simply mean in Rwanda, it will be around 8 somewhere 8, around 8 somewhere there. No, around 9, because 12:30 that would be around 9 Rwandan time. So yeah, and then you find the currency which the news will be impacted on. You can see you have GBP, this is British pound, you have euro, this is euro, yeah, we have GBP, British pound. Like for example, you will see the impact from here because that's what we depend on. You will see this yellow folder, you will see these yellow folders, and you will see this pink, I mean orange, and this red. We do depend mostly on the red folders because this is what means high impact news, which is expected in the market. When you come on it, you will find it will even tell you the details of the impact which will come out of the market. You can clearly see that this is low impact, which is expected in the market. High impact, low impact means there is no impact. It won't affect the market. It won't bring volatility or high movements in the market. So we will be good to go with tradings here. So, and then at around 7:30 p.m., that will be around 5 p.m. Rwandan time. We have got USD high impact news. That's GORTS job openings. These are we are expecting high impact in the market. We are expecting the market to move so fast to increase or to we are expecting volatility, high volatility in the market at around 7:30 p.m. Asian time. That would be around 5 that would be around 5 p.m. Rwandan time. No, around 4 p.m. Maybe around 4 p.m. Maybe let me say around 4 p.m. Rwandan time. Yeah, 4 p.m. Rwandan time. Depending on any country you are in right now, you can, if you open that link I sent to you, you will see the timing of the day where this news will be released. So anytime the news will be released, that time you should avoid, if you're not a news trader or if you're not a fundamental trader, should avoid trading that in that certain period of time because the markets will be moving so fast. Either if it goes against you, it will hit your stop loss very fast, or if it goes in your direction, it will hit your target as fast as possible. But then you won't have the news is not predictable. That's why we avoid trading it. News is not predictable because you might say, what if it goes in my direction? Yeah. But then if you consider all these informations, you will be gambling because news is not predictable. Because unless for those who trade news or who are fundamental traders, that's okay. But then news is not predictable. As technical analysts, news is not predictable. Yep. So we do avoid trading, or we do consider a better trade management. If maybe you have opened a trade, consider to press your stop loss to break even. And yep, such that if the news come in the market, you should not be taken out, or the market should not take you out because of the high volatility in the market. Yeah, so sure, that's what you should consider if the news is coming out in the market, or else if we have bank holiday. Bank holiday to mean no transactions will be going on in that certain currency. So from there, what we have, or it's just what if in general, neither. Let me also use Kinyarwanda. Like this is Forex Factory. Iyi ni Forex Factory. Iyi ni application. Iyi ni website tureberaho news cyangwa se amakuru ari kujya mbere muri world economy cyangwa se muri economy y'isi. Ashobora kugira impact cyangwa se ashobora kuaffecta nyine trades zacu mu gihe twafunguye trades ugasanga sometimes market iki gihe nikigera exactly kino gihe market iraba iri kugenda byihuse cyane. So from there ishobora guhitinga our stop loss cyangwa se ikatujyana muri loss cyangwa se ikatujyana muri profit kuko bitari predictable. Twirinda kubitrading kuko ntabwo turi aba technical analyst, ntabwo turi aba fundamental analyst ngo tumenye niba iri buze kujya muri direction yacu. So icyo dukora ni iki, we do avoid, twirinda kutradinga muri kino gihe. That's why we do avoid trading news during this period of time. Or else if we have a trade, we do consider trade management. Tugafata stop loss yacu tukayishyira break even kugira ngo bigende bite, kugira ngo itaza kuduhitinga nyine. Market movinga byihuse cyane ku buryo nyine iyo hano ari nk'iyi ni US dollar like hano hari foda y'umutuku bivuze ngo dufite high impact news. We have high impact news which will affect the high volatility in the market. To bring high volatility in the market. So it might hit our stop loss as fast as possible. So twirinda kutradinga during this period of time. You get my point. So that's all we have. So other times of the day we are good to go for tradings until around 7:30 p.m. That will be around 4 p.m. Rwandan time. That's when we're gonna consider to trade to manage our trades accordingly. You get my point. So let's go back in the charts. Is there anyone who have a question on Forex Factory? Between using top-down analysis and SMC, which is better? Top-down analysis is the best because SMC, you can't trade SMC in smaller time frame cyangwa se ntabwo wacuruza SMC muri time frame ntoya utabanje kumenya ibijya mbere muri higher time frame. So it's better to first of all analyze what is going on in the higher time frame and then know what to do with however whatever the currency, I mean whatever maybe the trading strategy you use, you can first of all know the direction of the market in the higher time frame. So it's better to use top-down analysis first before you consider any kind of trade strategy. Do you use SMC? If you use it, how to know real order blocks and supply zone? I don't use SMC. I don't actually use SMC and I don't believe in it. I don't believe in SMC because the too much complications which is there, which is trading is not even, as for me, I don't consider or I do believe that trading is all 100% not dependent. It doesn't depend on a trading strategy. So all these strategies which are very much complicated, they are just for, so like they will increase or what they will do at some point they will waste your, okay, if you're good to go, if you're good to take your time, millions of days, whatever for you to run like 5 years, 3 years for you to learn this certain strategy. Whereas trading is all about risk management and consistency. Otherwise, this SMC, this smart money, what like ICT, these complicated things, they're not worth trading. Yep, because the time you will take in running it and the consistency in it, it will take you a lot of time for you to even become a profitable trader. Yeah, for you to consider yourself as a profitable trader, whereas you have to learn all these all these concepts. Like that's, I don't believe in SMC. And the matter of fact that after you running all these things, you will come back and start from zero and start trading, know how to manage your risk, everything. So from there, it's like a waste of time, and still you will lose, and you still will lose. I don't believe in SMC, but then if you have time to run it, yeah, that's okay. But then, yeah, yeah, the trading doesn't only depend on a trading strategy. Just have that. I consider if better have that simple strategy, apply it over and over again, consistently. Apply it over and over again. That's what makes money in the forex market, not these complicated things which looks real. It will make it they will make it complicated and it will make you look like it's the real trading, which they still lose. They still lose money in the market. Barahomba, like ushobora kuyireba just ukagira ngo hari ni nyine like uburyo nyine ibikomplitse n'ibiki byose ukagira ngo hari niyo trading, nibo abantu bari gutrading, whereas they still lose and they even lose more. Right? So I don't believe, just that simple strategy, apply it over and over again, consistency, and apply a proper risk management. That's what makes money in the forex market. Apply that simple strategy. Make sure you know all the angles of it. Make sure you just run it to the edge and then apply it over and over again. Do the same thing today, tomorrow, next of tomorrow. Be consistent for it to be perfect, and then that's how you'll be making money in the market. Just focus on, first of all, protecting your capital. That's the first thing. Protecting your capital to simply mean, first of all, you want to know how much you're risking, how much you're allowing the market, how much you're willing to give the market in the first place, so that, and how much you're willing to take back from the market. Just controlling your capital in the first place. Otherwise, The strategies, the whatever, they don't matter in the forex market. Just have a better strategy. Learn from someone who knows how to teach that strategy better. Apply it over and over again. And then the first thing before you start trading, make sure you consider your capital in the first place. And then once you make money from the market, make sure you use these profits to make more money. In the matter of you protecting your capital first of all. Protecting yourself, that's the first thing you should know in the market. Because why? You are dealing with smart people. Smart, smart people. The people who learn this market, they are very smarter than you. They know how to trade more than you. So to me, they know all these concepts, all this smart money. They know all the strategies you think you want to run. They know all of them. They are very smart enough more than you. So how are you going to take money from them? When you go to a war and you know that your opponent is kind of stronger than you, which strategy do you use? First of all, you look for protecting yourself first, so that in the time maybe they will get tired. You just try themselves for them to show you their skills first by you protecting yourself, and then after they have showed you their skills, and then you take over. You now know what they are doing, and then now you act in the market. That's what we do. First of all, we watch, we analyze the market in the first place. We watch what the market, reacts like. We do watch what the market do, and then from there we react from the what the market have did. We analyze. We look for manipulation because there is a lot of before the market gives you money. It will first of all try to manipulate you. Izabanza kugushiramo utuntu tw'udutego kugira ngo first of all ibanze gukuramo amafaranga ijye yagenda. The market will first manipulate you before it goes in your direction. So first of all, you should know that in the first place, you should protect yourself first. Protect yourself first. Protect your capital in the first place before you dive in the market. You get my point? So a strategy doesn't matter in the first place. What matters is to know to have that experience in the market. And for you to gain that experience in the market is to have someone who is already experienced to let you know what to do, to let you know all these manipulations in the market. Because you're dealing with people who are very smart. The people who runs this market, they are very smart. That's why we have 1% of people who make money from the market. Because of what? They have understood what these people are doing. They just let them manipulate, do whatever, and then they know where to target. They know when to enter the market, and they know when don't enter the market. Yeah, you can still lose, but at least you won't lose much than you gain in the market. You get my point? So the first thing you should always do is to protect your capital in the first place. So first of all, protect your capital. So for protecting your capital, this is to mean you don't jump in the market. You know what you're looking for in the market. Wait for it, even if it can take you 1 week. Wait for it because you're protecting your capital. You don't just want to flow your money. Ntabwo ushaka kujugunya amafaranga just kuri setup ibonetse yose. Tegereza iyawe iraza then uyifate. Protect your capital first. Protect yourself first before you dive in the market. Yep. Any other problem? Hari ikindi kibazo? This session will be more of question and answers. And then, because we have this session, live free trading session from today up to Friday. So it will be easy for everyone to. Yep. Okay, this is a campaign I made for everyone, for those who can still afford my academy, my courses. So from there, yep, you get to learn some things. Yeah, but skills is the only weapon to protect your capital. Yeah, that's the point. Knowing how to protect your capital, that's the point. Yep, that's also the skills. Good. And the skills for you to know how to trade is for you to know how to analyze the market. And it's not enough for you to also gain that experience. So to gain, the reason why it's always hard for you to teach yourself trading is because trading is not all about the strategy or no. Trading is also part of the experience. Like what I know these people do that does the most for them to take money from me. So because I have faced millions of losses, I know what they do or how these losses turn themselves into losses. I know the manipulations which happen for these trades to turn into losses. So from there, if I know how to trade, I can still lose because I don't know the manipulation these people use. But if I know the manipulation, I will still lose, but I want to lose more than these people who are starting or who are teaching themselves how to trade. You get my point? Yeah, someone asked me to say, let's analyze Euro, USD, and USD JPY. Let's go ahead with Euro, USD. Let's see, do I have a setup on my pairs? There is no setup on GBP USD. Nope. AUD, do I have a setup? Nope. USD JPY. Come on, you're the first safari. Yeah, I've seen your raise. 1 minute, let me USD JPY. Do we have a setup on USD JPY?
May I ask?
Yeah, 1 minute. Hold on. Uh, 1 minute, 1 minute.
Thank you for this time. I want you to ask you
Mm,
a question about your strategy. What are
mm.
the key elements that you consider while you are analyzing your chart? Thank you.
Oh, all right. Let me use that question to also answer two questions at once. Once someone asked me uh to analyze Euro USD and as well USD JPY. Euro USD. Let me see. Mm, no, there is no current setup on Euro USD. But then let's analyze it together. What do I consider? What do I consider in my strategy, or what do I first of all consider or look after in my strategy? First of all, my key elements I do consider in the first place, that's higher time frame base. I do use EMAs and I do use EMAs, exponential moving two EMAs, exponential moving averages, and I also use higher time frame confirmation. To mean I use top-down analysis and then I use EMAs for confirmations for my entries and for me to know to clearly know the trend on and where the market is heading to. Ikintu cya mbere nkora first of all mbanza kureba bias kuri higher time frame. I do first of all consider higher time frame. What is the direction of my higher time frame? You can clearly see that I have an uptrend on higher time frame. You can see I have an uptrend. The market is heading to the upside on the higher time frame. And then suddenly I have a strong push to the downside. To me, there is something which happened already, which already happened somewhere here. This is to symbolize that if I'm doing Euro USD, Amayerona Madora. It simply mean that what I have here is I have Euro and USD. So if the market falls at this point, to simply mean that US dollar is gaining value. There is gain in value on US dollar. The US dollar gained value on Euro at this certain period of time since I guess since yesterday. No, since is this since yesterday? Yeah, since yesterday. Since yesterday, the market opening, the Euro USD have been dropping. To mean US dollar have been gaining value over Euro. To mean you can clearly see that if we have Euro USD, Euro is our base currency, USD is our core currency. To mean in this currency pair, we are considering the direction of base currency. So if base currency is heading to the downside, to mean we are selling, right? So to simply mean that US dollar is gaining value over Euro. That's why Euro is selling, US dollar is buying. US dollar is buying because Euro is losing value over US dollar. To mean US dollar is gaining value over Euro from this period of time. So even if we have in the higher time frame we have sales, we have buys, the market is higher time frame, like it's pushing to the upside to mean we have buys or we have uptrend in the higher time frame. but we should be careful with this because the market have started to tell us that the market is gonna start pushing to the downside. So what we are considering in the higher time frame, I'm not yet looking for buys, neither looking for sells, because I have two things. I have sales buys in the higher time frame. The higher time frame is telling me that the market is pushing to the upside, right? To mean if it's an uptrend, I do have an uptrend on the higher time frame. But then from yesterday, there is a strong push to the downside to symbolize that sellers have started entering in the Euro USD market. To mean US dollar is losing value, gaining value over euro. That's what it simply means by this drop. By this drop means US dollar is gaining value over euro. That's why euro is losing value because what you consider here is euro. This is a chart of euro on per USD. So USD is gaining value, euro is losing value. So from here, I'm neither yet considering for going for sales, yet considering for going for buys because the market haven't yet showed me a downtrend move. But then it have just gave me what? It have gave me a signal that the market is pushing to the downside. So after me considering this in the higher time frame, so I'm holding on to take any trade yet till I see the market breaking lowest points. These points. I want to see the market breaking this point and also the market breaking this point for me to consider start looking for sales, right? Otherwise, the higher time frame is telling me to buy, but then since yesterday there is notification that there is a symbol that the sellers have started entering, and it's not yet time for me to jump in the market because the higher time frame is still telling me to buy. You can see, right? So I have to hold on Euro USD until it breaks this point, this level, until it breaks this level, and it's breaking it already, and also until it breaks this lowest point, until it gives me a downtrend move. Then I can consider to take trades on Euro USD. Otherwise, right now, if I shift to lower time frames, yeah, I can see the market have strongly, sharply moving to the downside. But then it's not a good notification for me to start looking for sales because there is no clear setup for sales right now. So I have to wait on Euro USD. That's why I said there is no setup on Euro USD because there is no clear setup for me to consider sales because that's what I'm considering. That's what is entering because USD is gaining value, Euro is losing value over USD. So ngomba gutegereza first of all nkareba first niba market iri bube clear movement to the downside. So I have to wait. I have to hold on and wait. You get my point? So to me, on your chart, for those who trade USD, consider higher time. First of all, before you analyze the market, consider looking for higher time frame. What is my higher time frame saying? You can see I have an uptrend. Yes. So if I have an uptrend, so I should be looking for buys. For example, from my strategy, if I consider a break of trend line, to mean this was a clear setup. The market broke this line and then I was good to go for buys. This was simple for me to go for buys, for me to consider buys, and then as simple as that, right? You see, just waiting for the market came here for the first time. That's my strategy. It it rejected for the third time, and now this is a level of resistance. So I wait for these levels to be weak or to be broken, and then I can take the trade. You can see after this level being broken, you can see how the market strongly pushed to the upside. I wasn't looking for sales because the market is in an uptrend. So now the same thing here, the same thing here. I should be looking for buys, yes. I should be even have been taken buys around here after the break of this level, but then the market didn't reach my target around here. Let me see if I would have took a buy here. Let me see. Because what I do consider, first of all, I look for levels where the market have rejected the most, levels of resistance and level of support. You can see, right? Reba inshuro market ya rejectinze kuri uno murongo. Rimwe, kabiri, gatatu, kane. Inshuro eshanu. Rimwe, kabiri, gatatu, kane, gatanu. Inshuro eshanu zose. 1, 2, 3, 4, 5. 5 times the market rejecting from this point. So this is a point of resistance. So my strategy says I always wait for this level to be broken or to be weak. You can see this level, the market came and blocked it. After breaking it, I was good to go for buys. My stop loss here, and then target 1/2. But then see, because the sellers came in the market pushed and then boom, it came back. To simply mean there is notification that sellers have entered in the market. But for me to consider to take sales, now I do have to wait for the market to give me clear, downtrend movement. And the downtrend movement is like this. The market structure to the downside, the market should break lowest point, lowest point, lowest point, lowest point. And the market haven't yet gave me something like this for me to consider, start looking for sales, right? The same thing in an uptrend. The reason why I'm looking for buys in an uptrend here is because the market have been breaking highest point, highest point, highest point, highest point. Yagiye breaking at points zo hejuru, like highest point. Ariko kuba itarampa points, ku break za points zo hasi cyangwa se lowest points, I still hold the market. I can't go for sales right now because the market haven't yet clearly approved that I'm good to go for sales. There is no downtrend movement for me to go for sales. So I still hold on Euro USD to mean I don't have a setup on Euro USD. So this is what I do. When I'm analyzing, I'll be saying all these things in my mind. I go on the higher time frame, I come back on the lower time frame. Like I just analyze this chart by talking, right? But on myself, I'll be just analyzing with my head, using all these key elements for me to do it, for me to analyze. So this session will be recorded and it will be posted on YouTube for free. So maybe if you didn't understand how I did this, you can still go back to the recorded video. It will be posted after the session so you can get to understand it properly. Did it make sense? Did I make sense here? Did it make sense for those who trade Euro USD? Like, did you get the point? All right, all right. Any other question? Any other question? Benson Makara. Korea. All right. Yeah, you can,
Yes.
Benson, you can ask. It's fine.
Yeah. Merci beaucoup.
Hmm.
Am I allowed to ask in Kinyarwanda?
Yeah, you are around any language you're okay with that. Mvuga ikinyarwanda neza
Okay.
kandi cyane. Hmm.
Hanyuma ubwo
Mm-hmm.
sinzi uri buje no kumfasha kuri
Mm.
gold. Njyewe
Yeah.
I'm a beginner ntabwo ndabimenyera cyane but
Mm.
gold ijya sometimes ureba trend
Mm.
ukanashushanya ziriya support and resistance level ya breaking sometimes hari igihe mba mbona bidakurikiza structure kandi umuntu aba yabikoreye kuri time frame nini aka downsizinga agashushanya imirongo njye sometimes nkoresha umunota umwe
Mm.
nka scalping
Oh, you
ariko
scalp.
irazamuka
Okay.
nashyira stop levels hasi iraza igahita iyirya igahita yongera igasubira hejuru nkabona igiye muri nuze yanjye nkibaza se ibi bintu kweri ko bamwe babikora nkabona babikora ariko njyewe bikananira kweri
What we can. Uh-huh.
njyewe
Impamvu.
iki kibazo
Uh,
kiragutanga
okay. I got your point. I got your point. Impamvu rero bibaho. Like for those who are comfortable with English, he was asking me to say, sometimes he will analyze the chart by use of a higher time frame. First of all, he might confirm in the higher time frame for him to know the trend and everything. But then him shifting in the lower time frame, like 1 minute, and then from there, the market starts not to respect the trend. Or starts not first of all, the market takes him out before it continues in his direction. What happens is that's scalping. That's scalping. That's scalping. Like that's scalping because you are scalping, right? You're using lower time frame. To mean there is what might happen. Lower time frame, this to simply mean that for those who understand what is a time frame, this is the duration of time where it will take, like, for example, for one candlestick to close, like duration of time it will take for one candlestick to close. It might take 4 hours, 1 hour, 30 minutes, and then the combination of these candlesticks at once with the same time frame, that's what we call charts, right? So from there, you might be having a chart of 4-hour time frame. To mean, in a chart of 4-hour time frame, if you look for a trend in the 4-hour time frame, to mean how many minutes are there? A lot, right? A lot. Like, for example, I'm in 4-hour time frame. Let me go on 1 minute. The chart will become too much. They will become a lot. You can see from here. It will be a lot. Too much, too many candlesticks, right? To mean, what happens in 4 hour, that's a lot of 1 minute candlesticks. So to mean, in the smaller time frame, like 1 minute, what you should do or what you should consider, when you are analyzing in 1 minute chart, first of all, consider, like, if you are in 1 minute chart, like your higher time frame should be somewhere 15 minutes. You should not exceed 15 minutes, because if you go in for, that's a bigger time frame for you. If you're analyzing your chart with, or if you're trading with 1 minute time frame, consider 15 minutes time frame as your higher time frame, maybe maximum 30 minutes time frame, for it to don't go far from the trend. And then 15-minute time frame, if it tells you the trend is downtrend, because still we are looking for downtrends, because it's still downtrend on God, right? We are looking for sales. If you don't find a notification for sales, or maybe a level where the market is at, like, for example, at this level, I might consider that maybe the market is like, maybe the market came to cover a gap which is around here, let me say somewhere around here, and the market have already covered, maybe left a little bit, or maybe depending on where on which currency, on which like strategy you use. First of all, look for a buyer. What you're looking for in the market. Are you looking for the market to cover the gaps, or are you looking for supply and demand? Or, if first of all, consider to go, first of all, like, for example, if you're looking for the market to cover the gaps in the market, or either you're looking for a trend line, or either you're looking for like, for example, like a pattern. Let me say, for example, this is what we have on gold. We have this pattern right now on gold. Maybe I have it on 15 minutes time frame, and I'm expecting maybe that like gold might come and reject here and come back to the downside. Wait in your higher time frame. Wait for that 15-minute time frame to start rejecting from here. And then from there, you will be notified that the market is going to start going to the downtrend in the smaller time frame, because it will happen before it shows up on the 15-minute time frame. Kuko uyu nguyu, iyi ni iy'iminota mike, so bivuze ngo ibiri bubere muri 15-minute time frame birabanza kubera mu munota umwe. So bivuze ngo mu munota umwe urabibona mbere yuko biba showed up kuri 15-minute time frame. Sibyo? Kuko ino candlestick ya 15-minute time frame, this candlestick of 15-minute time frame, it's made of 15 candlesticks of 1 minute. Sibyo? Candlestick imwe ya 15-minute time frame, sibyo, igizwe na candlestick 15 za 1 minute. Bivuze ngo turaba ari twinshi, right? So bivuze ngo uraba notified yuko market igiye kutangira kumanuka, cyangwa se you will be notified that the market is going to start pushing to the downside in the 1 minute before it reaches on the 15 minutes. So to mean, you will be waiting for the market to reach to this level, and then you shift in your 1 minute time frame to look for sales. That's when you're good to go for sale, because you shift here to look for sales, because the market have clearly gave you a position where at least you are good to go, that this is a place where the market is going to start buying, or this is the place where the market is going to start selling. Don't buy or sell in between the market. If, for example, you know the market is at this is the level of resistance, this is the level of support, don't look for sales or buys around in between here. Look for sales, either if the market reaches here when you are expecting a rejection, or either look for buys when the market is here when you are expecting a rejection. Because of what? It doesn't matter the time it will take to reach to your resistance level or your support level. Kugira ngo igere hano, ishobora kubanza just igakora ibi ngibi ikagaruka, ariko ikaba iri buze kuhagera. Ariko iyo uziko yahageze, uba uzi ko igiye gusubira hasi. ariko itarahagera irakora ibyo ishaka byose. Same thing if for example a bus is moving from maybe Rwanda to Nigeria, for example, it might pass to South Africa, you don't care, right? Whatever you know is that it have to reach to Nigeria. So if it reaches to Nigeria, now you know that it's time for it to come back to Rwanda until it reaches. So you have to wait for it to reach Nigeria to start cutting tickets to come back to Rwanda because that was its destination. So you have to wait for the market to also reach the destination of rejection so you can start to look for sales. Or either it reaches to this destination where you're expecting buys so you can start to look for buys. Don't press a trade in the middle of the movement. Did I try to make sense here? Did you get the concept I used here?
Yeah.
Is it now clear? Because it might give you fake trends here. It might give you fake trends before it reaches to where you're looking for. So depending on the strategy you're using, wait for the 15 minutes time frame confirmation, and then you shift to now 1 minute and start looking for your setups. Yeah. Is it now clear? Because in between it will
Thank you,
give you
man.
fake trends. Fake trends.
Mhm.
Yeah, that's the point. Clear liquidity. Yeah, if you do trade also liquidity, and I guess also we have for those who trade also liquidity. I guess also we have liquidity on gold here. Maybe might expect a move to the downside. It's possible. So you have just got to wait for what the market is gonna do here. But what I'm expecting on gold is a push to the downside. And then my EMAs, let me see. Still the EMAs are looking, so I'm looking for sales in the market. So I might expect, because I do analyze in 30 minutes time frame and as well in 1 hour time frame. So I'll be looking for sales on gold. Looking for sales on gold to mean I'm expecting gold to break this point for me to start looking for sales. I'm expecting gold to break this level for me to start looking for sales. These are like gold going back breaking in a level for me to so whatever I can't say right now because I can see a gap here. There's a possibility. I don't trade gaps, but there is a possibility for gold to first come and cover all these gaps here and then start pushing to the downside. You might ask yourself, what is a gap? You can see the market pushed massively to the downside and it left a space like from here where the last candle was and the next candle, maybe I would say around here. But then gold have already covered up to this level. So I might left this point. So we might expect maybe gold to come around here, cover this gap, and then go back to the downside. Ilikumvikana, no. Panem FX. Yeah, you can ask a question. Did Euro USD had an April setup? No. We don't have a setup on Euro USD now. We do have a setup on Euro USD right now.
All right, it's what or about to ask.
Okay. That's better. Any other question? Is there anyone with another question? I don't know if teaching ikibazo. And you're good to go with any language, either if it's Kinyarwanda or either if it's English, but not French, but not Kiswahili. Yeah, Imana irafasha safari. You want to ask?
Yego murakoze, reka mbaze mu kinyarwanda kugira ngo nsobanukirwe neza.
Nta kibazo kabisa.
Mwansobanurira liquidity
Ugerageze kongera ijwi
definition.
cyawe
Yego
wegere.
ndashaka kumenya liquidity mu definition ya nyayo n'ukuntu wahita uyimenya muri
liquidity. Cyagufasha kumenya liquidity.
Yego, no kuyisobanukirwa ngo liquidity nkamenya ngo ni iki.
Okay, all right. So, What is liquidity? Liquidity means, this is like part of like big boys praise. Let me call it like this: big boy praise. Like ni strategy. Big banks cyangwa se moving a market. These people, like, what is it? He was asking to say, what is liquidity and how can you spot it? Liquidity means, this is the time whereby this is like a praise, or these are models, manipulation models, big boys or market movers use to manipulate the market. Or for example, to take you out. Like for example, if they're expecting, or where the money is, or where your stop loss is, retail traders where their stop losses are, or as because all of us were retail traders, right? So this liquidity system mean this is the price where most of our money is, or most of our stop losses are. So first of all, it will first of all take us out of the market. You ask yourself what happens when I have analyzed, I have took a trade, but then the market will first of all hit my stop loss and then start going in my direction. To simply mean what happened there, what happened is, like, the market will take you out, the market will hit your stop loss level and then start going in your direction. So what happens is, the big boys had to play, like they are smart enough to know, because they can know where your stop loss is. They will first take you out and go in your direction. To mean, first of all, what will make them do that is because they don't want to make you money in the market in the first place. Ntabwo bashaka gukorera amafaranga. They are smart enough for them to let you have to don't let you make money from the market. They don't want to lose also in the market. So they will manipulate you, they will take you out before they go in your direction. You get my point? So most of the time you will find liquidity, you will sometimes you will confuse it with break of structure. Break of structure, we have got break of structure. This is to mean if the market is pushing to the upside, break of structure, this is to mean the market is breaking to the upside. The market is breaking to the upside to symbolize uptrend. But then if it's liquidity, first of all, liquidity to simply mean, it will first of all consider, because if we have uptrend, to mean we are looking for buys, right? So now if it's liquidity, this is to mean if I'm buying from here, I will put my stop loss here, right? So what will happen is the market, first of all, before it goes in this direction, it first of all come with a big movement. It take out these people who put their stop loss here and then continue in the direction of an uptrend. So liquidity is the market will first of all come, take you out before it goes to your direction. So what will help you spot liquidity? Liquidity, you will spot liquidity with a wick of the candle, not a body of the candle. For example, here, see liquidity here. Someone maybe would have went in a buy right here, for example. Let me say, for example, here, this was a level. You can see how the market used to take out this level. It used what? It used a wick. You can see that, right? It used a wick of the candle. It used a wick more than the market taking out these people by using a break of structure, by using a what? By using a body of the candle. You can see the difference between this one and this one. This one, it uses a wick of the candle. It takes out by using, it just tapped on it and then it hit your stop loss and then continued to your direction. So to me, this was liquidity, this was break of structure. Actually, this was a change of character because the market was moving to the downside and then it changed characters to symbolize that it's going to the upside. So this would be a trap for those who doesn't know how to trade the trend. Start looking for buys, whereas the market is selling. And then from there, they took buys and then it takes them out by this strong movement to the downside. So simply mean that for you to spot liquidity, the market will take out by use of this small candlestick. You can see, right? By use of this small candlestick. If you do a small candlestick here, take a look. I mean this small wick of the candle. Take you out by this small. For example, if you're entering in a buy, your stop loss, maybe you entered in a buy here, your stop loss was here, your stop loss was below here, and then target maybe this level here. See what the market did. Or let me say you targeted 1/2, for example. See what the market did. Came back and did what? Liquidity. boom, you do out and then continue to your direction. You can see that, right? You can see that. You can see that. Take a look at it. This is what we call liquidity. It takes you out and then it continue to the direction. This is what
Understandable.
you got it now.
Yeah, I got the point.
All right, perfect. This is what we call liquidity. Any other question? Someone has to say, look on 30 minutes time frame USD trend line, and it retested to downtrend, I think. USD let me see. USD You said 30 minutes, right? USD 30 minutes. First of all, USD we have buys because the market is an uptrend. Let me zoom it out in the higher time frame. We have got buys in the higher time frame. The market is kind of consolidating from here, but then in the higher time frame, we have got buys. We are looking for buys in the market. So to mean we are not looking for sales in there on USD. That's the first thing we have confirmed. We're not looking for sales on USD because of what you can see the higher time frame is pushing to the upside. That's the first confirmation. To mean we're not looking for to downtrend. I think no, you're not looking for sales on USD. That's the first thing you should do before you make a mistake to know or to make a mistake to don't take a trend, which is to don't take effect trend or effect like effect trend. Yeah, to don't enter in effect trend. USD. We are not looking for sales. We are looking for buys in the market because we have what? We have a break of like we have break of structure to the upside. We are looking for buys, and currently there is no clear setup on. Let me see. Let me see. Do we have a clear setup on? Let me see, for example, because if I connect all these levels of, oh my God, see how we just missed an entry right here. You can see this level. The market rejected it first time, second time, third time, fourth time. To mean, I was waiting for this level to be weak, this level to be weak or to be blocking, and then we take the trade. Can see the market did what? Came, it tested, and then we would have entered around here. We would have took a trade around here, around this level. If I around this level, break off, yep, around here, a stop loss underneath here, and then targeting somewhere 1/2, targeting these points, all these points above here, targeting these points. But then the market have already moved. You can't just take the trade from here. You can see, right? Let me even share this trade. We look on it on let me share it in the group as well. We have got buys on USDJ, but don't take it. Don't take it. Don't take it. Don't take it. USDJPY, USDJPY buys. Out of our entry. Yep. Let's see what else do we have. Yep, that's what we have on USDJPY. So you would have made a mistake to look for sales, whereas the market have already blocked From my strategy, I wait for this level to be broken and then mostly retested and then I take the trade. Yeah. So is there any other one with a question or a setup? Any other question? Hari ufite ikindi kibazo? Hari ufite ikindi kibazo cyangwa a question? Otherwise, this session will be recorded. This session will be a recorded session and it will be posted on YouTube. And this will be a 1 hour session, a 1 hour free trading session. So from today up to Friday, we're gonna be taking these sessions from today up to Friday. From today up to Friday, for those who for those who might not be, or for those who might be asking themselves, how do I take my live trading session? Because I do take this live trading session with my students every day. So this will be a great opportunity to those who wants to, like for those who don't afford or who can't afford my, maybe who don't have or who are still doubting on how my academy works or how my live trading works or how do I teach in my live trading academy. So from there you get to access a lot of things. You get to learn more. You get to ask many questions. So prepare your questions, either maybe if it's not today, in tomorrow's session, prepare your questions, prepare what you want us to talk about in the session so we can get to talk about it. Any question yet? Any other question? Because I guess there is no current setup present in the market right now.
I have question.
All right, feel free to ask. It's okay.
Okay. I wanted to ask if you do live live class session, like physical training section.
Physical?
Yeah, physical training section, like
Um,
physical class.
physical classes. Yep,
Yeah,
I do. Where are you located right now? You're from Nigeria?
Kigali.
Eh?
Yeah, I'm from Nigeria, but I'm in Kigali. Yeah,
You are in Kigali. Oh, like
yeah.
physical classes. Like the doors will be open in Kigali Chic in around August. In around August, end
Okay.
of August, you will get to access physical classes in Kigali. Right now, they are on hold due to some reasons and repair stuff. So you get to access them in August, around end of August. So you get to access them. So don't worry about that.
Okay. So your
Yeah,
online classes and signal group is open
yeah, it's open. It's open. Yeah, it's
for
open
for
now.
August.
Yeah, for August. Yeah, for August intake, it's open. Yeah, I will share the informations regarding August intake. Maybe end of today, I guess. I will share the informations for the August intake. Yeah.
Okay. Sorry, how
Like
much is it?
like for regarding it depends. You can either choose to pay a membership of 3 months or either a membership of 6 months. There is a membership of 3 months, which is that's around $70. In dollars, that's around $70. That would be equivalent to 100,000 Rwandan francs for the 3 months membership. And then there is a 6 months membership, which is 150,000 on promotion right now, Rwandan francs. So it depends on which membership you want to have. Otherwise, to complete my course, maybe to transform yourself from a beginner to an intermediate trader, my course takes around 3 months for you to be able to complete. You need at least 3 months for you to be able to complete my course. Yep. Including live
What
trading
up?
sessions and yeah, live trading sessions every day. We do live trading sessions for you to get to, because the way I do train, I don't train by use of books or what. I do expect you to learn from what I do. So we take live trading sessions every day in my academy. So if you're active, you will get to access it from today up to Friday. I'm gonna be taking free live trading session like this from today up to Friday. You get to access how we do carry out the live trading sessions. Yep, this is how you learn. This is
Okay.
how you learn a lot from trading, not like reading books or watching videos. No, that don't teach you trading. For you to learn trading, you need to have someone who you see what they do and copy that from them. That's how you get and ask questions. That's how you get to learn trading.
Okay. Okay. And
Mm-hmm.
what about the Signal group? Like,
Uh, Signal Club.
because I noticed you have a Signal group that you share Signal when you trade, and
Uh, yeah,
people
it's
take
also
your signals.
it's also part of membership. Like for Signal Group, like for those who have already paid the membership, that's to mean they will access the Signal Group. They will access live trading sessions. That's what I mean. Entering in my academy means you are paying for the membership. Then you access live trading sessions. You access free signals. You will get to access they also the past sessions because all sessions are recorded. You get to access all the videos from last year, from last 2 years, which you have recorded. So from there you can get to learn even from what we have did before you join the academy. All the videos, all the sessions, all the live trading sessions, all the winning trades, all the losing trades, all the advices, all the ideas. Yeah, and the community also. For you to get to learn from practicing, not to learn from reading or what, just practicing. I do believe in practicing more than reading. Yeah.
Okay.
Mm-hmm.
All right.
All right, thank you.
No problem. Yeah.
Someone asked me liquidity zero jari. Okay, liquidity. You should expect liquidity any time of the day. Any time of the day. Anytime. Even now you can expect. Liquidity means they are trying to take you out uh before before they go in your direction. For example, this is the you can see the line I was drawing for you. For that one, I don't know who asked me about 1 minute time frame. Let me try to remember. You can clearly see that the line I draw here, the market was here, right? When I was explaining it. Now see the market came, it did what? It rejected and now boom, it's starting to push down. So see where it is right now. See where it is right now. You get what I was meaning? See where it is right now. This is a part of the strategy. This is the strategy I use to trade. So from here, I will be waiting what? I'll be waiting for the market to break this level, and then we can take the trade.
Which level?
This level of